Hello, everyone. Thank you so much for clicking on this video today. If you're new here, welcome to the Unicorn Method. And on this channel, I teach people how to trade Forex and futures in a disciplined and structured way. And if you aren't new here, welcome back. In today's video, I'm going to explain what futures trading is in a very simple, beginner-friendly way. So if you ever wondered what exactly are futures, how do people make money trading them, and why do so many traders trade futures, then this video will help clear that up for you. Thank you guys so much again for clicking on this video, and we can go ahead and get started. All right, so let's start with the basics. What is Forex trading? Now, Forex trading is the buying and selling of a contract that represents the future price of an asset. Now, that might sound complicated at first, but it's actually pretty simple. So instead of buying something like a stock or a gold or physically owning it, you're trading a contract that follows the price of that asset. So traders are simply speculating on whether the price will go up or down. Now, future markets are traded on regulated exchanges, which means they operate through official financial institutions that oversee the transactions and ensure the markets runs fairly. Now, these markets are also used in many global industries and financial markets. Now, future trading exists in many markets. So, for example, futures contracts exist for things like stock indexes, commodities, currencies, oil, gold, and also agricultural products. Large companies, institutions, and investors use futures contracts to manage price changes in these markets. But traders participate in futures markets mainly to profit from the price movement. So if a trader believes the price of a market is going to rise, they can buy. And if they believe the price will fall, they can sell. And that's the basic idea behind futures trading. All right, so let's look at a simple example. You can visually understand how traders make money from the price movement. Now, on the left side of the image, we see an example of a buy trade, also called going long. Now, in this example, the trader buys the market at 4,000. The trader believes the price is going to rise. So as the market moves upward, the price eventually reaches 40.50. And at that point, the trader closes the trade by selling. Now, since the price moved from 4,000 up to 40.50, the trader captures that price movement and makes a profit. So the basic idea is simple. You buy low, and if the price goes higher, you profit. Now let's look at the right side of the image, which shows a sell trade, also called going short. In this example, the trader sells the market at 4,000 because they believe the price is going to fall. Now, as the market moves downward, the price eventually reaches 39.50. And at that point, the trader closes the trade by buying back the contract. So since the trader sold at 4,000 and the price dropped to 39.50, they profit from that downward movement. So this is one of the powerful things about trading. You don't only make money when the market goes up, you can also make money when the market goes down, as long as you correctly predict the direction of the price movement. In futures trading, traders are constantly analyzing the market to decide whether they believe the price will rise or fall, and then entering trades based on that explanation. All right, so let's look at an example of an actual futures market. Now, one of the most popular futures markets that traders participate in is the S&P 500 futures market. The S&P 500 is an index that tracks the performance of 500 of the largest companies in the United States, including companies like Apple, Microsoft, Amazon, and many others that a lot of us are familiar with. So instead of buying individual stocks, traders can trade futures contracts that follow the overall movement of the S&P 500. And there are also different contract sizes available. Now, for example, you'll often hear traders talk about the E-mini S&P 500, which is called ES. And there's also a smaller version called the Micro E-mini S&P 500, which is known as MES. And I actually trade that one. That's the one that I trade daily. Many beginner traders start with the micro contracts because they allow you to participate in the market with smaller levels of risk while you're learning how the market moves. So when the traders are trading MES or ES, they're essentially trading the price movement of the overall stock market. If the market goes up, traders who bought can profit, and if the market goes down, traders who sold can profit. So, for example, the S&P 500 futures price moves from 5,000 to 510. I'm sorry, 5010. That movement represents an opportunity for traders who correctly predicted that direction. Now we're going to talk about why people trade futures. There are several reasons why futures markets attract traders from all over the world. One of the biggest reasons is the opportunity to profit from the price movement, like I talked about previously. As we saw in the previous example, traders can potentially make money when the price goes up or down, depending on the direction that they trade. Another reason people trade futures is the high level of market activity. Now, the future markets are very active, with large numbers of buyers and sellers participating every single day. This is often referred to as liquidity, and it helps make it easier for traders to enter and exit trades. And also, future markets they operate for many hours throughout the day. So that actually allows traders in different parts of the world to participate. So because of these factors, futures trading has become one of the most popular markets for traders looking to take advantage of price movement. Now, before you start thinking all trades as profits, it's really important to understand the risk involved. So that actually brings us to the risk of futures trading. So just like you can make money from price movement, you can also lose money if the market moves against you. So guys, remember, the markets can move very quickly, and sometimes price doesn't go in the direction you expect. Now, I know from experience that this is very true, because I've watched the market and I expected it to go into a buy, and then I actually got into a buy, and the market has actually turned around on me and I lost that trade. And that can and will happen to every single trader. So don't ever get into the market and think that you will never lose, because you will. And it's important for you guys to understand that if you want to be a trader. Another important factor is emotions. So a lot of beginners, they struggle with things like fear, impatience, or trying to chase trades, and that can lead to poor decisions. This is why learning risk management and discipline is so important. Successful traders, they focus on protecting their account just as much as making profits. Remember that trading is not about winning every trade. It's about managing your risk and staying consistent over time. All right, guys. So now we're going to talk about common beginner mistakes. One of the biggest mistakes is trading without a plan. Now, a lot of beginners, they enter trades just based on what they feel or what they think might happen, instead of following a clear strategy. But it's always best to follow a trading plan every day when you go to trade. It kind of makes me feel like I'm all over the place if I don't have my trading plan to follow. So when you start to trade, make sure you make yourself like your own trading plan and stick to that plan always. Now, another common mistake is risking too much on one trade. So for example, putting a large amount of your account into one trade, that can be very dangerous, because if that trade goes against you, you can lose a big portion of your account like really quickly. Another big one is letting emotions take over. So things like fear, greed, or frustration that can cause traders to make impulsive decisions, like jumping into trades too early, closing trades too soon. And I will always tell anyone who wants to trade this, because it's one of the top most important things to me when it comes to trading. Please keep your emotions in check. This is so important, because making emotional decisions when it comes to trading, it can really mess with your account. Now, I've blown accounts because I've let my emotions get in the way of my trading, and it's not a good feeling at all. If you're upset or you're stressed out about something, or something traumatic happens, or you got a lot of stuff going on and it's kind of just messing with your emotions, do not trade. That is the best thing to do, is stay out of the market until you feeling better, because that can interfere with your trading. And lastly, many beginners, they struggle with over trading. Now, this means taking too many trades instead of waiting for high quality setups. So for example, after a loss, some traders try to jump right back into the market to make their money back. And that usually leads to even more losses. So understanding these mistakes early can help you avoid them and become a more disciplined trader over time. And this also has to do with emotions as well, because you can lose and get really upset or angry and want to get right back in. Because I've done that, and it's a mistake, guys. So remember all these mistakes in trading, and please try to avoid them. They may get tempting, or sometimes you may not even realize you're doing it. But just try to remember. Rewatch this video if you have to, or take notes now. Add these to your trading plan also. So that way, each time you look at your plan, you'll see it. Like, you'll see everything not to do. And this is why discipline is such a big part of trading. It's something I focus on heavily when I teach. Okay, guys, and that is the end of the basics of futures trading video. Thank you so much for watching this video, guys. I also want to let y'all know that I'm currently building resources to help beginners learn how to trade in a structured and disciplined way. This includes beginner-friendly trading education, live Zoom classes where I break things down step by step. I'll have a trading community where you can learn and grow with others. And I'll also be doing one-on-one sessions for people who want more personal guidance. So my goal is to make trading simple, clear, and realistic, especially for beginners who feel overwhelmed starting out. So I've been there, guys, so I'm here to help. So if you're interested in learning more, make sure you subscribe to the Unicorn Method, because I'll be dropping more videos to help you guys understand trading step by step. And I'll also be sharing more details soon about how you can join my community and access to full training. Thank you guys again so much for visiting the Unicorn Method, and I will see you guys in the next video. Bye.